The markets are betting the Iran war is over, with global stock benchmarks returning to pre-war levels. But wallets still feel the war as gas prices remain high and inflation is a constant worry. Wall Street stocks have marked one of the largest reversals in history and set new records on Thursday for the second straight day. The S&P 500 has reversed the 8.5% loss and the $5.3 trillion wipeout during March. The benchmark has added $6.6 trillion since President Trump's ceasefire announcement. Nasdaq is up over 16%, adding more than $5.2 trillion. While the tech-heavy index climbed for the 12th consecutive day, the longest winning streak since December 2019. Global investors and the International Monetary Fund seem to agree that the Iran war is likely over. The energy market is less sure, and there could be an awful lot of shouting. But many asset prices have returned to square one, and markets now see the conflict's impact only at the margins. Still, what consumers pay at the pump and for almost everything else remains elevated. Even if the war ends immediately, households are expected to feel a sustained high and hit to their wallets for a while. Markets and real world tell a diverging story. Markets are pushing higher on bets of a deal between the US and Iran. However, the real world is telling a very different story. 12% of global oil production is offline. 30% of helium production is gone. 30% of fertilizer supply is disrupted. 20% of LNG production is lost. Stocks set new highs on rising optimism the US and Iran may extend their truce and return to the negotiating table. Adding fuel to the rally was an upbeat forecast from chipmaker TSMC. But tensions remain high over the Strait of Hormuz as at least 2 US sanctioned ships made their way through the waterway. And economists flag stagflation risks again, citing Trump's disruptive policies. Global markets on Friday were reflecting some of those concerns, trading mixed.